Alrighty, so Apple, A minus income statement here. Pretty, very respectable income statement from Apple, considering they don't have any hyped products in the market right now, and this is still very solid numbers for the company. They came in with product sales almost $69 billion versus 66, right? Services revenue came in at $26 billion versus $23 billion. Total net sales came in at over $95 billion in the quarter versus 90.7. So, we can call it, what is that, about a $4.5 billion increase on a year-over-year basis. It's impressive. Good work, Apple, right? They kept their expenses in check. So gross margin dollars went to $44.8 billion from $42.2 billion. They also kept research and developments in SG&A in check as well. So operating income went to $29.5 billion from $27.9 billion. Nice increase. Net income went to $24.7 billion from $23.6 billion, and diluted EPS $1.65 versus $1.53. So certainly not a perfect income statement, but respectable, very respectable numbers from Apple overall, which once again is impressive. Like, think about it. This company doesn't have any product in the market right now that is hyped, that everybody's like, I got to go get the new Apple, blah, blah, blah. And they still put up a very impressive quarter. Good on Apple, right? Now, additionally, a lot of people were scared about the tariff situation in regards to Apple and what that's going to do to their business model. But you know what's interesting? Based upon Tim Cook's numbers here, it doesn't sound nearly as scary as you might have thought. Apple estimates tariff impact will add $900 million to cost in June quarter. $900 million? Nothing. I mean, look at the numbers Apple's doing. They're talking about a company that does almost $100 billion in revenue. Almost $100 billion in revenue per quarter, right? I mean, we're talking $900 million. That's nothing. So the tariff stuff, man, you would have thought, like, it's got to be, like, in the billions and billions of dollars. It's not, actually. So, I don't know. Apple, that's actually pretty darn impressive there, right? Now, you know what's crazy? I don't think anybody's ever pointed this out and talked about how crazy this is. But I got to do it for you guys, okay? I'm going to point out how insane this is. Apple has only shareholder equity of $66 billion. Now, if that's almost any other company in the world, $66 billion of shareholder equity would be a big shareholder equity amount. But for a company that has a $3 trillion plus market cap on it, it's nothing. Literally nothing. And so, what's interesting about that is it goes to show you a couple things. One is how asset light Apple's business model really is. That they have that little in shareholder equity, right? $66 billion for a $3 trillion market cap, that's nothing, right? And the second thing, what that shows, I think this is very important that everybody understands this. That is because of the massive share buybacks they've done over the last decade. Because do keep in mind, if Apple would have chosen not to do all the shareholder buybacks, which, by the way, there's nothing wrong with the shareholder buybacks. I'm just pointing out, like, if they wouldn't have done that, let me be very clear to you guys. Apple would have shareholder equity right now of somewhere between $500 billion and $1 trillion on this company. They would have the biggest shareholder equity probably of any company in the world, just to be quite frank, and certainly of the big techs. It would have been a ridiculous number. But they've decided to elect for share buybacks, which, speaking about share buybacks, they announced they're going to buy back another $100 billion of company stock. Now, do keep in mind, Apple's now, a $3 trillion plus market cap. So, $100 billion doesn't go as far as it used to go. And what's interesting is I was looking at some shareholders and kind of their response to this, and some are disappointed, folks. Disappointed in Apple's only buying back $100 billion. Some are scratching their head like, that's it? So some people thought like at least 125, if not 150 billion, if not bigger than that. So actually some people are actually a little scared that Apple's only authorized $100 billion buyback, which is crazy because it's just a ridiculous amount of money. Like, imagine doing a $100 billion share buyback and people being disappointed in it, but that's what's going on here. Additionally, if you do own Apple stock, do keep in mind they just upped your dividend as well, which is very, very nice, okay? Now, what about Amazing Zon? Well, I don't know if you guys follow me on X or not. I always have that linked in the description area, as well as my Instagram as well. So if you use Instagram or X and want to follow me on those platforms, That's always linked in the description. But in regards to Amazing's on here, I posted this here on X. I said, revenue slight beat about $600 million. EPS was a very nice beat, $1.59 versus $1.36 was expected. I'm happy, buy, right? And so those are beats, but it's not Smash Factory. And in this market, to really have your stock blast higher, you've got to come through with smashing. Because everybody's uncertain right now. All these people are scared to even buy any stocks right now. The international people are like holding out because they want to prove a point. And so you're in a weird market right now where people are scared to buy. So if the only way you can really get a massive move up in a stock is you got to come through with the Smash Factory on earnings. If you come through with just beats, it's not good enough. Not in this market right now. Let's be very, very crystal clear about that. No. Amazon's income statement, banger, grade A. Look at this. Net sales went to $155 billion from $143 billion. That's a $12 billion, about a $12.2 billion increase on a year-over-year basis. Cost of sales, they kept that in check. Fulfillment was a little high. Technology and infrastructure was a little high in regards to that. G&A actually dropped on a year-over-year basis. Think about that. They spent less on G&A and increased their revenue $12.2 billion. Jeez, these companies can run lean, huh? Incredible. Operating income blasted higher to $18.4 billion from $15.3 billion. Interest income was higher. Interest expense was down. Let's go, baby. So I'm talking about. And also had some other income there, about $2.7 billion. Now, look at the net income. $17.1 billion versus $10.4 billion in the same quarter last year. Diluted EPS, $1.59 versus 98 cents in the same quarter last year. Grade A income statement for Amazon. If the revenue growth was stronger, I would have gave them an A+. Let me be very clear about that. But since the revenue growth was, kind of that 9-ish% range somewhere in there, they get a grade A, not an A+. But they were close. It was close to an A+. Now, if you want to see a big boy balance sheet, look at Amazon. This is a big boy balance sheet. Keep in mind, Amazon's market capitalization is probably about $1 trillion less or so than Apple. But yeah, look at the stockholder equity. It's about 6x roughly of Apple, right? Somewhere around there, 5x, 6x. Total stockholder equity on Amazon is $305 billion. And look at cash and cash equivalents plus marketable securities, right? $66 billion in cash equivalents. Marketable securities at $28 billion. Total assets now is $643 billion. Amazon's asset heavy, right? Which shouldn't come as a surprise. Think about all the AWS infrastructure the company has. Think about all the warehouse network all over the globe and all the trucks and the planes and everything like that, right? Now, a couple other interesting things I thought was worth mentioning here is they launched Interest to find products for customers' passions and hobbies using generative AI. Interesting. They began full-scale deployment of Project Kuiper satellite internet network with launch and activation of first satellites. That's interesting. They began testing their Zoox autonomous driving vehicles in Los Angeles, the 6th location for Amazon's self-driving technology. One of the locations, by the way, is in the city I live in, Las Vegas. Seems like they mostly test around the Las Vegas Strip area, though, and a little off the Strip. I haven't really seen any of these products really in the suburbs, like Summerlin, Henderson, things like that yet. They announced a joint venture to create the next generation of esteemed James Bond film franchise, which is very exciting. The Bond films, always wonderful. They signed new AWS, Amazon Web Services agreements with Adobe, Uber, Ubidi-Booba, NASDAQ, Ericsson, Fujitsu, Cisco, Cargill, Mitsubishi Electric Corporation, General Dynamics, and GE Vernova. So a bunch of big AWS deals, which shouldn't come as a surprise because the world runs on AWS. New foundation models in Amazon Bedrock, including Anthropic, DeepSeek's R1, and Meta Llama 4 family of models, right? So I like it, right? They also announced Amazon's first quantum computing chip prototype that reduces resources needed for quantum error correction by up to 90%, right? Big stuff. It's the thing, like everybody just thinks about Amazon and all those trucks driving around and, think about AWS, but I'm like, this company has just so many things going outside of just those projects. But it's just like, those businesses are so insanely massive that they just kind of dwarf all these other things they're working on, right? Whether it's satellites or self-driving vehicles or quantum chips or, all the other million different things they got going on. No, as far as their guidance went for the company, they guide it to revenue growth of 7 to 11%, right? So you can say midpoint of 9%. What do we know about Amazon? Amazon usually comes in and beats their revenue expectations. So I would expect minimum net sales growth of 11%, bare minimum, but maybe up to 12% or higher, which is very important. You know why? Because if they do that upper range, they're going to have an acceleration of revenue growth. So what we are about to likely go through in regards to Amazon here is an acceleration phase of revenue growth for Amazon. And it's been in some time since we've been in a revenue growth acceleration phase for Amazon. Now you say if they come in with 7%, sure, that would not be a revenue acceleration. That'd be a continued deceleration, which is something we've seen continuously for Amazon for a bit, deceleration. But it looks like they're about to flip over to revenue acceleration again, which is going to be huge for the stock price because we know, you could look at basically every single time Amazon starts going through another revenue acceleration phase, the stock price usually performs tremendous during that time. Operating income for the company, they projected between 13 billion and 17.5. If you look at the same quarter last year, they're at 14.7. What do we know Amazon does? They come in and beat their numbers. So they're probably going to do over $17.5 billion of operating income, which will be a huge, huge increase, right? So that's important. Now, where do I think these stock prices are going from here? Well, Apple is stuck in the 180 to 220 range, okay? And it's stuck there until the company has some sort of major higher or lower growth rate than what it has right now. So if the growth rate was to really stall out here, you would definitely see Apple go lower and probably even under 180. Now, on the flip side, if you get a big acceleration of growth, let's say they were to increase revenue acceleration like 10% or something like that, then we could talk about the stock could go above 220. But until then, which, is probably for the next 6 to 12 months, the stock is just stuck. It's stuck in the mud probably between about 180 and 220, right? Until they eventually get out of this kind of, single digit mid-range that they're in as far as revenue growth goes, right? Now, additionally, the reason Apple just doesn't have any, major room to move up right now, right, is you've got a stock here with a forward P, looking at 1000xstocks.com, we've got a forward P here of what, 27, 28, but you got a single-digit revenue growth company. For a single-digit revenue growth company that you're expecting to grow anywhere between 2 and 7%, you're just not going to command much higher forward P than that. Like, it's pretty unrealistic. And so that's another reason it just gets hard to get Apple out of this kind of stuck range of 180 to 220, which is just kind of where it's going to drift until we see any sort of major deceleration in the business or acceleration in the business, right? Now, when it comes to Amazon, a little different here. This stock's headed to $200 plus. And here's why, okay? If you look at Amazon's expected revenue growth, you look at the forward P of Amazon somewhere around 29, right? Versus Apple's around, just under 28, right? So roughly same forward Ps, but here's the deal. You're getting around 2x the growth rates with Amazon versus somebody like an Apple, right? So you just got a much better growth. You got a forward P that's very similar to somebody like an Apple. And additionally, Apple has a big overhang on it right now, which is Google. And the reason being is Apple generates a massive amount of their services revenue from this Google deal that they have. And there's a potential that the U.S. government is eventually going to basically say Google can't do that anymore. And so people think it's a hit to Google. It's a much bigger hit, in my opinion, to Apple, because Apple makes so much money from that. And it's basically, straight profit for Apple. And so if that changes, it's definitely going to hit Apple to a certain extent, right? Of course, they might have somebody else fulfill that demand, and Apple can still make money, but it's just like, I don't think they're going to make the sort of money that they're making from Google right now. So that will hit Apple if that happens. So Amazon's on its way to 200, but let me show you where Amazon's headed over the next several years. So I have Amazon growing revenue on average 12% per year, 2026 to 2029, okay? I have them doing net income growth of around 20% a year from 2026 to 2029, right? Now, P ratio, an extremely fair P ratio for a company growing at those sorts of growth rates would be 27 to 33. You can make a very strong argument that with those sorts of growth rates, P ratio should be over 35, but I'd rather go a little conservative here. 27 to 33 is very conservative considering these growth rates. which means the stock next year will be somewhere, let's call it between about 210 and 250. The stock in 2027 will be somewhere around, let's call it 250 and about 300. 2028 would be, we can call it about 300 and about, 360, right? And then 2029, we should have a stock somewhere between about $360 and about $440, somewhere in there, right? So I'm expecting Amazon stock to basically 2x in price before 2030, right? And that's with fairly conservative estimates. Once again, you can make an argument that the multiple the stock should be able to command is much higher than where we're at here. And, to be honest, especially with share buybacks and things like that, you can make an argument that earnings per share could increase on average by much more than 20% per year over the next, 4 or 5 years. So the moral of the story is, come 2029, I'm expecting to have at least doubled my money in Amazon from where it's at now. So when you see I have, let's say, $200,000 in the public account in Amazon, assuming I don't buy any more shares over the next several years, which I might continue to buy shares, if we're going to look out a few years from now, that should be at least $400,000. And the important thing I just took you through there is how you got to think as a higher level investor if you ever want to be like really good investor. Because what a lot of people fall into a trap is they just throw stuff out there like, oh, I think stock blah, blah, blah is going to $1 trillion. Okay, why? Because of, it's got a big thing it's going after. Okay, what does that mean for the revenues? What does that mean for the net income? What does that mean for the margins? It's got a big thing. That's not how you invest, okay? It's like you want the big account. You want the big dollar amounts. You want to make huge gains. You want to have the big house. You want to have the nicest cars and go on the nicest vacations and do all that stuff. You can't be a fool in this game, man. You got to actually run the numbers for real. You got to run real projections here. You got to do it on a high level. Otherwise, you're just throwing stuff out there and hoping it sticks, right? And sometimes if you're in a really bullish market, it does stick. And that makes you think like, oh man, this foolish way I'm doing it is just throwing stuff out there. That's a smart way. No, it's not. You're going to end up in a lot of trouble like that. You got to actually run numbers, run projections, run a bull case, a base case, a bear case on a stock. Perform up to a much higher level, and then you'll get to much better places, right? Hey, it's Jeremy. I hope you really enjoyed that clip here today. What you looking at in front of you right there? That's the 6-figure Hall of Fame. Do you want to see the next one? That's the 7-figure Hall of Fame. Now, that is my private group. Those are members of my private group that have scaled to 6 figures, multi-6 figures, 7 figures, multi-7 figures in their stock market portfolio. They say you are the average of the 5 people you associate with. If you're somebody that is having trouble finding other long-term investors that are focused on building their wealth over the coming years, finding like-minded folks, look no further than my private group. We got a tremendous amount of people. We're consistently talking with each other, learning from each other, researching companies together, sharing news about our different companies, right? We do all that inside my private group. If you would like to apply to join us in there, go down in the description area. There'll be an application down there. You can click on that and you can apply to join us in there and take your game up to a much higher level and associate with the type of folks that you actually want to associate with. Okay, so let's start going through this. I'm going to take you through. Let me start. You know what? Let me go reverse. Let me show you my bear case first. Then we'll go base case, and then I'll show you my bull case. Okay, we'll go reverse style on this one. Alrighty. You want to see my bear case for AMD? Here it is. My bear case for AMD is that they grow only 15% revenue per year, 2026 to 2029. Let me be clear. Horrible. If they only grew revenue 15% a year on average, with MI350 coming and then MI400, and as they expand beyond that, with all the spend that's coming in the next few years in regards to the AI space, oh my gosh, this would be awful. Disaster. Like Lisa Su, she might fire herself. Literally, Lisa Su might fire herself if they only did 15% revenue growth on average per year, 2026 to 2029. Okay, super unrealistic, but you got to be really bearish. Net income growth at 25% there, right? So here's the deal. With that sort of growth rate, people might only value the company at a P/E ratio of 20 to 30, which puts the stock in 2026 at somewhere between 115 and 173. 2027, 144 to 216. 2028, 180 to 270. Oh my gosh. AMD is a massive moneymaker even in a bear case. I just took you through a case that Lisa Su might fire herself if it was that bad. And it's still a banger investment. It's still a banger investment. Even at a 20 PE ratio with tragically bad numbers. And it still would be a CAGR of 20+%. Now you can see why I've been buying AMD left and right recently. Let me take you through my base case for AMD. Base case for AMD, I have them growing revenue 20% per year on average, 2026 to 2029, right? I have them growing net income at a faster clip than that. Remember, they're going to get, in my opinion, a lot of lift on that net margin over the coming years, okay? So I have that net margin going to about 32% come 2029 from the, we can call it the 20% range, right? 30% net income on average, right? Now, on a company that's grown 20% top line, 30% bottom line, a 25 to 35 P is like pretty dang dirt cheap, to be honest with you guys. Like pretty dirt cheap. But from a base case, I'd rather still be a little conservative rather than a little wild, right? And man, they're going to blow these numbers out of the water. But I would rather be conservative on my base case. So where's the stock price? Well, next year in 2026, the stock price was somewhere between $150 and $210. Keep in mind the stock price today is $100 or around $100. Actually, technically a little under $100, right? 2027, somewhere between about, we can call it about $200 and about $270. 2028, $250 to about $350. In 2029, about $329 to $461, right? That's a conservative base case. My gosh, is AMD a moneymaker. Let's go bull case. You ready? You ready to have your flapjacks flipped? You ready for a holy smokers, this ain't no jokers? Let's do it. Already, bull case. And then doing 30% revenue growth on average, 2026 through 2029, right? Keep in mind, 2026 should be a crazy revenue growth year, by the way, like crazy, because you're talking about the first few quarters are going to have MI350, and in the back half of the year, we'll have MI400. Oh my gosh. With growth and embedded likely at that time in gaming and client. Okay, so 30% revenue growth for my bull case. And my net income, I have them doing 40% on average for that 4-year span there, right? Which gives us a 32% margin still, again, 2029, right? Now, 30% top line, 40% bottom line growth on average per year, you're easily commanding a PE ratio in the 30 to 45 range. Easily. Even in the semiconductor space, if you're growing that sort of growth rate per year, right? So that puts the stock price next year, 2026, somewhere around $200 to $300 a share. That puts the stock price in 2027 around $270 to about $400 a share. That puts the stock price in 2028 between about $380 and $570. And come 2029, $532 to $792, which gives me a compound annual growth rate of 50% on the low side, about 70% on the high end. It's very hard to make a case to not be buying AMD stock right now. Very hard. You don't have much to go off of. Because you look at the company and you think about the chips that are coming for this company, right? You think about the need for these chips and the infrastructure to continue to build out these big tech companies. And it's nearly impossible to say, like, it doesn't make sense to buy AMD. Like, AMD feels like it should be part of everybody's portfolio. Like, Lisa Su and AMD would just have to completely fail. Like, fall flat on their face over the next few years to not make a lot of money in the stock, right? And so the only question to me in AMD is how much money is there to be made over the next few years, right? And in my estimation, the risk reward here is unbelievable because the stock price is priced like, you know, they got nothing going on here. Look at the forward P. The forward P is what, 20? A little above 20? They're priced like they got nothing going on. And then you think about the companies, the numbers they're putting up right now, and it's like, do people not get like they're about to get to a whole new level of growth as this year ticks on, and then you go into next year? You know what next year's numbers are going to be? Oh my gosh. So this is just very early days, right? And remember, this isn't even, you know, we're talking so much about what's happening over the next year or 2 or 3 years. Remember, this is a next 10, 20-year play. these chips that AMD is producing and NVIDIA is producing, right? Like, the need for those chips is going to be even more and more and more and more and more, right? So it's just very hard to say, like, let's not buy AMD. Very, very difficult, right? No, you could say, well, what if I just buy NVIDIA? Here's the deal. Like, somebody could easily buy both NVIDIA and AMD and do like a partner buy, right? Kind of like I did with Celsius and Monster earlier this year, and I've done it on some other stocks in the past, where I'll buy two stocks kind of in the same industry, just as, like, you know, I might go heavier in one than the other, right? Somebody could easily put, like, you know, $3 in AMD for every dollar they put in NVIDIA, or $2 in AMD for every $1 they put in NVIDIA, or something like that, or do half and half. Like, there's a lot of different options here, right? But to, you know, sit on your hands and not be interested in this stock is just, it's kind of crazy, man. It's kind of crazy. And so, you know, the futures are looking very good for both those companies long term, in my opinion, AMD and NVIDIA. I just think there's, based upon the numbers I'm running and projecting here, there's just a lot more money to be made in AMD than NVIDIA over the next few years, right? So, woo, AMD, man. Like, well done, Lisa Su. Well done, team. And I can't wait to see, you know, where their numbers are at, even next quarter. Never mind later on this year, never mind next year. Like, oh my gosh, like, you know, we're early days here. And so very, very exciting in regards to AMD to buy everything in sight.